Alright, what's happening, investors? Well, this video is about Li Auto. For those of you who don't know, Li Auto is a Chinese-based manufacturer, very much China-oriented. The only exports they have right now is, I think, due to black market activities, but different topic. So they make electric vehicles that are hybrids, and they're very good products for upper middle class type of families, what we would consider in the United States anyways. The vehicles range, they're all basically like crossover SUVs. They range from a small size type of SUV to a very large size, L6 to L9. So L6, 7, 8, and 9. And their newest attempt at an all-electric vehicle is called the Mega, which is basically kind of like a van. It looks like a big rectangular block, basically, with tiny wheels on the bottom. It has a pretty good battery on it. It charges super quick in all these stations. Like, the tech on these vehicles is very good. I think Chinese manufacturers are very much caught up or even ahead of the game when it comes to EV manufacturing. So this company, I just want to give you a quick profile of the company before I start talking about it, in case you're not familiar. But if you're watching this video, you probably are familiar with all this stuff. Some things that I think are pretty amazing is actually the valuation metrics of this company. This is why I got interested in it in the first place. That plus a recommendation from an investment professional that I happen to listen to on a podcast. Shout out to Market Huddle out there. Okay, they have some really good guests. It's probably my favorite podcast to listen to. So the valuation metrics on this company are just mind blistering. Okay, first, the enterprise value of the company is $8.5 billion. All right, so it's not 200 billion. It's 8.5 billion. This is dollars. The market cap of the company, the market capitalization, the price of the company is 20 billion. So there's an 11.5 billion difference in there. That would actually represent the cash holdings of the company. So the company's cash is more than the value of the business. Okay, so let's say Tesla is worth 200 billion, for example. Well, is the equivalent of Tesla having $115 billion cash, okay, and no debt. Well, they actually have they have $2 billion of debt, but they have more cash to cover for it, so it kind of cancels out. So this company is extremely cash rich. All right. Next, it earns a ton of money. Okay, so it's up and down, obviously. It has lots of sales. They're very steady sales. The earnings go up and down based on how much reinvestment they have to do. It's the auto industry is a very, very capital intensive industry, almost as much as mining stocks. Okay, so because it requires so much capital, it requires a lot of reinvestments, and you have to factor that in. Just because you have a really good quarter with tons of earnings does not mean that the next quarter is going to be also, just as good. So that's very important to keep in mind when valuing these types of companies. Next, the EV to sales, or enterprise value to sales, is 0.48. Okay, very, very low. The EV to earnings is 5.48. So the only type of earnings, the only companies that can show these types of earnings metrics are mining companies or steel producers or something like that for a quarter or two at a time because of the nature of the business. So these are extremely good metrics. EV to free cash flow is just mind-boggling. I can't understand this metric here. EV to FCF, FCF is 1.94. And if you're familiar with this metric, it's one of my favorite metrics to go to when looking at a company. This is extremely favorable. Okay, it's very, very good. Operating margin is a 4.8. It's kind of thin. Their profit margin is actually higher than the operating margin. I think it's because they get a lot of credits from the government. So I think the company is subsidized by the government, and that obviously is helping out a ton, right? But it's not unlike American companies. Over here, our EV companies get subsidized just like our solar companies used to get subsidized and maybe still are. So it's not something ultra surprising. Now, I think that this company could stand on its own 2 feet without these subsidies, which is not the same, in my opinion, for other EV makers in China or around the world, period. I think this company can be profitable if it wants to. It would just have to sacrifice speed of growth. Now, I'm going to move on to the strategy of this company so far, the way I see it. I think they just wanted to, Li Auto wanted to come up with a product that the above average family can find extremely useful and practical. And they did come up with that. They started with a little bit of some more high-end vehicles, and then they dropped down to the Li 6. And the 6 is the cheapest vehicle. I looked up some of the pricing online. Believe it or not, you can buy this from AliExpress, okay? Now, I don't suggest anyone goes out and actually does this, but the price range is anywhere from $36,000 to about $58,000, so $40,000 to $60,000 car. You know, it's probably in line with like, I don't know, your average European import. And these are the hybrid vehicles, okay? Just keep that in mind. I think the strategy to make hybrid vehicles has panned out to be really good. A lot of European manufacturers and even US manufacturers are paring down their EV ambitions and focusing more on hybrids. Mercedes used to declare that it would be an all-electric company by such and such date, and some other companies have done the same kind of pledge, but many of them have walked back those statements. And of course, Toyota not going in all in on the EVs, looking like a pretty big winner at this point. They decided to focus more on hybrids. I think they have like some kind of future crystal ball on that company. So Toyota is definitely a threat in this business. So the strategy so far, I think, is working out pretty well. So what I think is going to happen in the future, okay, is that this mega vehicle is a little bit of a blunder. Now, they're not going to say it's a blunder, obviously, but they're not selling as many vehicles as they perhaps thought, is my guess. Because, you know, an all-electric van is, first of all, it's pretty expensive, right? And second of all, I think the Chinese consumer wants to drive an EV, but does not want to have to deal with a growing but still underdeveloped electrification network around the country. So they want to opt in for some kind of a hybrid solution, and this is exactly what they're getting. They're getting good gas mileage, right? They're getting a little generator engine that powers up their batteries, and so the range is extremely huge. I'm not going to talk about like very specific metrics and vehicle sales on this channel. I just want to take a look at the company at large and to see if I can guess where it's going, because I'll talk about my own position in a little bit. So I'm going to talk about where I think the company will go after this. So after the Mega, I think they'll probably focus more on the hybrid strategy for the time being, and I think the next models will be something even smaller and sleeker, perhaps something to compete with the sedans out there for people who don't want SUVs. Like, they might want to move their next project that branches out of that, like family home on the road type of mentality, might actually be a sedan now, a hybrid sedan that competes with, let's say, the Neo sedans or some other sedans around in the market. but I'm guessing there's probably going to also be a hybrid. It's not going to be a full electric because there will be nothing to differentiate that electric sedan from the vast expanse of electric sedans that are now abound in China. I mean, China's got so many EVs. They have entire malls, okay, dedicated to selling electric vehicles. It's just crazy. I've watched some videos of some creators or journalists, whatever you want to call them, going around these malls trying to check out all the possible vehicles. They couldn't even finish it in a day, right? You can't go to all the stores. They have so many brands. But Li Auto is one of the heaviest selling brands in China. They're not goosing their sales. I mean, they straight up sales, very, very high demand. And they do have a lot of exported vehicles to countries like, Uzbekistan, Russia, the Middle East, towards the Middle East, along the Silk Road. There's some debate how much of this is legal, how much is not. But the bottom of the story here is that the cars are bought, the money is given. Where that money came from doesn't really matter for the company at this point. And it's going to allow the company to grow. It doesn't have trouble selling its vehicles. So having this expertise in making a successful product, I think is really going to help it moving forward. The other thing that they've done really well at least now, I'm not that certain of this. I've done some research, but you can correct me if I'm wrong on this. But their self-driving capabilities and basically their computer, their navigation, and its ability to keep you safe on the road and park for you and things like that is, from what I understand, superior to most other manufacturers, or if not all, in China, and maybe on par with Tesla abilities, which are very, very good. Li Auto, though, uses a combination of sensors, right? Not just cameras like Tesla. And so, people praise it. I don't know how good it is. I don't have first-hand experience, but those who do, claim that it's just the best thing since sliced bread. Now, all that technology combined with pretty good design, in my opinion, the SUV doesn't try to stand out and look like something crazy. The Mega does look like, something that came out of a RoboCop movie. But the SUVs do look pretty normal. They're not trying to, make things super weird looking. And so the design is good. The interior is just beautiful, I don't know about the electric vehicles and their design with just big slabs of screens everywhere and iPads for controls and be ultra touchscreen electric. I don't know about that. I'm a bit old-fashioned and I like to be able to touch controls and knobs and wheels and things like that. So my taste is perhaps a little bit old-fashioned, but I would have said the same thing about the BlackBerry keyboard back in the day versus the iPhone, touch keyboard. I thought the iPhone touch keyboard was annoying. I wanted something physical. I was one of those guys. So, my taste can't necessarily be trusted when it comes to these matters. So perhaps the whole screen and touchscreen controls of the car might turn out for the best. But I do appreciate a good aesthetic design. It doesn't have to be tactile necessarily, but the aesthetics, I do appreciate. And for the fact that it has a bunch of screens basically glued together on there, the vehicle inside looks really good. The materials look premium. The seats are designed well. It's obvious that their number one aim was comfort and functionality. And I think that's going to be really hot with the consumer. Not just because that's my opinion, but the numbers actually bear that out. So I think that's going to continue. The company will grow, especially if these subsidies from the Chinese government are in place. And if what the news articles are baiting us with, investors, is that the tariffs on Chinese electric vehicles are going to be less. They're going to be lessened. Right now, they're doubled, basically. Now, I don't want to talk politics on the show, and I don't want to predict the future, but that is a big consideration when buying electrical vehicle from abroad. I mean, the price being double is kind of a big deal, right? paying 60 grand and 120 grand for a vehicle is a big difference, especially since this is a marginal vehicle. This is not one of those, supercars that the more the better. It's not a vehicle where you flaunt your wealth, right? It's not like Pagani or something where it's like, oh, here, watch me blow 2 million on a vehicle just to show how rich I am, and so I can drive around in style knowing that nobody else can afford one of these, right? It's not that, right? This is for practicality. So the price does matter quite a bit. So we'll see what happens with the tariffs. We'll see what happens with the China and U.S. relationships when it comes to trade. It seems like the U.S. wants to turn relations back in favorable business terms with China, but that's, it's a huge factor, but it's anyone's guess at this point. I mean, I'm trying to read the tea leaves, but it's hard to figure out. You can bet your behind, though, that if indeed the tariffs are reversed and if trade relations are back on top, all these Chinese companies, all these ADRs, all these, variable interest entity ADRs, by the way, that's what you're trading when you're buying Li Auto, just like Alibaba and JD or any other Chinese-based company. You're trading a very variable interest entity, okay, that's based off some island somewhere that has the rights for the profits of the company in China. Okay, you're not actually trading the Chinese company itself. I just want to make sure everybody knows that in case you didn't. But all these things, these are legitimate, investment vehicles. They're not like a joke. They've been around for over 20 years and they're still persisting. So it's not likely that you're going to lose all your money overnight. Although I did invest in some Russian companies, before the invasion, and those assets got frozen up and basically deleted. So I took an L on that one. I didn't think that was going to happen, but so you got to be prepared for every scenario. Don't put all your eggs in one basket when it comes to these types of risks. I mean, they're real, even if they're minimal, in my opinion, with these ADRs. ADR stands for American Depository Receipt, and VIE, Variable Interest Entity. Basically a structure to wrap around what you're trading on these exchanges in the US. Okay, I'm going to leave you with that. I think the company's buy. My position actually is, well, I had quite a bit of shares. I had maybe like 40-50 grand into this company, but I sold some calls and the company had a nice boost up, and so the calls got hit, and so now I'm left with only like 100 stocks. Okay, so I'm going to be trying to, on this downturn here that the company is experiencing currently, I'm going to hope to accumulate some more shares and see if I can build another position through options. I'm going to be probably selling puts, or if I buy outright, I might cap it off with some call sells. But I'm going to leave another 100 and maybe later another 100 shares just uncapped, because I think the company will grow, and I'm going to use my proceeds from premium selling to try to accumulate shares. So that's what I'm going to do. Let me know what your strategy is about this company. If you own it, how much do you own, and what do you think the future lies? And also, I'm really mostly curious, and nobody ever comments on this. It's like, what did I get wrong? Like, why, tell me what I messed up on the video so I can go and research it, right? If I got something wrong, and you know something that I don't, please let me know. This is why I'm here. That's the main reason, is I want to learn, I want to get beat up by the comments so I can find out, okay, maybe I need to look at this or this news outlet, maybe this information's incorrect, etc. So please let me know in the comments, what's up. Alright guys, this has been fun, okay? See you next time.